Good afternoon, Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about services and free products, just visit CFDs.com. Okay, hello there folks. Okay, so certainly check out the website CFDs.com. Obviously I'm working on analyst and trying to produce material for the average trader on a daily basis and keep you up to date. Many more projects coming. There's a website as well up and running now. Hopefully should be active over the weekend, and there'll be webinars starting very shortly, and also there'll be daily research reports hopefully starting from next week, if not the week after. That will be priced at £20 a month. Okay, and that will obviously provide you with support, resistance, potential setups on a daily basis for a number of variables. Okay, or alternatively, if you do open an account with CFDs.com, you will be getting that for free. Okay, so those of you that are interested, certainly go ahead and open up an account at CFDs.com. Once you've opened an account, please send me an email and you will get that for free on a daily basis. So that will be starting from next week onwards. Okay, so certainly make a note of that and we'll visit the website and certainly get an account open. There is a 25% cashback bonus as well for those of you that are new to trading or are looking to open up an alternative trading account. Okay folks, now let's try and sum up the actual European session itself. Okay, so I've already done a video with regards to the NFP, pre-NFP, and basically my analysis more or less was spot on there in terms of the economic data being stronger than expected, which in turn obviously caused the actual dollar to spike, the euro to fall, which was already explained via the bonds. If you follow the OAT or the OAT, which is a French bond, or if you follow the actual euro bond, the bobble, the shats, also, and that will explain why the market was obviously looking for a dollar rally. And if you looked at the dollar index, I did explain that there was an inverted head and shoulders formation. So those of you that have been following the videos, obviously this video here, then you will certainly know as to the situation. Now the only thing that I didn't discount in was the actual data being so strong that it would actually trigger off a rate rise concern. Okay, and that obviously in turn causes the markets to obviously sell off. So let me just bring that up for you now. So let's bring up the charts. Okay, so bring up a chart of the dollar and I'll be able to elaborate and explain as well. So let's have a look here. Okay, so the chart of the dollar is coming up now. We'll discuss the inverted head and shoulders formation, and obviously that's negative for the FTSE 100 given the fact that you have a strong dollar. Strong dollar leads to commodities being hit because of the inverse relationship. Okay. Just allowing this to load. Here we go. Okay, so the actual dollar, let's bring up the dollar index. It's here we go. If I bring up the chart which I demonstrated and showed you, okay, with regards to the US dollar, obviously previous resistance equals support there. Okay, and hence the reason why the market popped. The European markets are coming into resistance. Okay, so here we go. You had your left shoulder, you had your right shoulder, the head was in, pop, off we went. We haven't exactly closed the gap level, so watch out for that. That's certainly a level to observe and watch out for, folks. Okay, so that's the situation that we find ourselves in with regards to the dollar itself. Okay, so going back to the European indices, let's see how they closed. Okay, so they did actually get a late pickup, although the actual Euro Stocks was still down 1.2%. The FTSE was down 0.7%, the extra DAX almost 1.1%. So basically overall it was certainly down, except the Russian market with regards to talk of interest rate cuts. Okay, and that generally followed the actual bias from the perspective of Asia. Okay, so how do we interpret the events now? So let's go to our charts themselves. So let's go over the FTSE 100. Now that we know that we have concerns over Greece, the delay in the IMF deal and the uncertainty going into the weekend, obviously that all in all that creates uncertainty, creates fear, etc., and obviously causes the market to certainly come under pressure. And that's exactly what we're seeing with regards to European markets, with the FTSE retesting the 6800 zone again. Okay, 6800 zone again. The DAX is back below the 11,200 almost. The Euro Stocks obviously is retesting at 3,500 level. We do have a a speech, or we do have some type of announcement expected from Mr. Varoufakis in the very shortly. So I think a lot of individuals are certainly awaiting that, and that will obviously dictate the next move in the markets as well. Okay, so the FTSE 100, let's go to the daily chart of the FTSE 100 and try and break this down and tell you where the market currently sits and where we're expecting this market to go going forward. Okay, because there has been some damage done on the weekly chart as well. Okay, let me just quickly just jump to the weekly, because I think the weekly is very important here, especially with regards to the 6800 level. That is quite crucial. Okay, now this is a real concern if you're a FTSE trader. Okay folks, so basically what this means is that you have a bull flag. The market's been consolidating in this green candle. Can you see how it consolidated in this green candle, then obviously thrusted higher? When you have a pattern like that on a weekly chart, that's a very worrying sign. A very, very worrying sign, folks. This is certainly a very worrying sign as a trader. One should certainly be worried, and one should remain cautious with regards to the future price action with regards to FTSE. When you have a failed bull flag on a weekly chart, that is not a good sign, okay, especially based on technicals. Now obviously if we base that on stronger economic data out of the US, means that interest rates are going to be hiked. That's obviously negative for commodities, and if it's negative for commodities, then obviously it's negative for FTSE 100, hence the reason why you've seen the oil price today come off. Also with regards to the OPEC meeting, I don't think a lot of individuals got what they expected, so again there's some concerns with regards to that as well. Okay, so these are all the factors that we have to certainly take into consideration. Now we are approaching the 200 MA, so 200 MA is around this 6750 level, so keep an eye out for that. Obviously you've got double bottom support at 6760, and then the 200 MA being at 6750 on the daily chart. So again 6750 is the key and critical support level with regards to the FTSE 100 on the downside. Just draw these levels in, here we go. Okie dokie. So here we go. Okay, here we go. So the levels, once this is broken, if this fails to hold at 6800, then you have support at 6770, 6760, then you have support at 6730, support at 6700, and then 200 MA as well. But this is a very negative type of well, the price action here is certainly negative. Okay, so the FTSE 100, that's a scenario that we have here. Now if you look at it from a larger from a bird's eye view perspective, you certainly have an argument here for a H&S formation as well. Okay, so again that's something that you need to take into consideration. So you can say that's your left shoulder, there's your head, obviously gone in, you're looking at your right shoulder, and obviously the market flushing itself. Add in the fact that obviously you have a failed bull flag on the weekly chart, again that's not a good sign. Okay, so all these signs or all these signals at this current juncture certainly are not pointing in the right direction, let's put it that way. Okay, it's certainly a cause for concern. Right, let's go to the smaller time frame now with regards to the FTSE 100 and try and see where we try and identify the direction. Okay, let's have a look. So the 60-minute chart, obviously we've even failed to hold this falling contracting wedge type pattern. Okay, we were struggling to hold this pivot support around 6810 level, and the next support will then be obviously the 6766 level. So given the fact that we don't have anything from Greece, and if we don't get anything from Greece, then it's a real concern. Okay, and then the bulls will certainly start to potentially panic and throw the towel in as well, especially given the fact that we also on the S&P 500 you have a H&S formation. So if I just bring up the daily chart, and you can certainly see that clearly. Allow me to bring this up. Let's have a look. Okay, here we go. So it's a 2-day chart. I need a 1-day chart. Okay, so the H&S formation target on the S&P 500 is 2062. So 2062, given the fact that you got this H&S, the H&S target 2062, you're looking at this level and this level here. So your 2076, you got support, and then obviously 2072, and then obviously your 200 MA is at 2043. That's interesting. Okay, so 2043, and then obviously if the market continues to flush lower, then you really are looking at even weaker levels further down below. Okay, so again, S&P 500 certainly indicating potential weakness as well for the FTSE 100. So again, it's very crucial and important that level actually holds. Now the 10-minute chart of the FTSE 100. Okay, let's try and delve into the 10-minute and see if there's any signs of stabilization. Now yes, we do have signs of stabilization here. So you've got this these lows here. Okay, bear with me. Okay, so you've got these obviously pivot lows here. The market certainly is respecting them so far and looking for a potential higher low before it starts to rip or move higher. So again, that's something that certainly needs to be observed and watched as well. That's an interesting scenario with regards to the FTSE 100. Okay, so now let's move on to the German DAX now. See if the German DAX can give us an insight. Okay, 10-minute chart itself, obviously we are putting a potential pivot low, looking for a pivot high, or a higher low, shall we say, and obviously that will dictate the next direction or next move in the markets. Now the actual 60-minute chart of the German DAX. Let's see if we can break this down. Okay, so the 60-minute chart of the German DAX, as you can see here, we have support in this region at now 11,200. We put in a bullish engulfing candle. We're looking for a potential bull flag. So again, that's certainly up in the air, and that certainly needs to be discussed as well with regards to going forward. Now the daily chart is probably the most important with regards to the DAX, and the daily chart will be dictating things. Okay, it will be dictating the next move. So again, that's going to be quite important and quite crucial with regards to the actual FTSE 100 itself. Okay, the actual chart of DAX. Let's bring up the chart of the DAX. We've cover the CAC Euro Stoxx. So yes, the next one would be Euro Stoxx. Euro Stoxx again struggling to make a base. I did actually hold this for quite some time, and then I actually closed it for plus 15 before it started to reverse quite sharply. Okay, so again, it's a feeble bounce. I mean, I would not be surprised given the fact that you've got Grexit, etc. If the 200 MA doesn't get tagged, I mean that will be a real concern for the bulls with regards to the actual market tagging that level below. Okay, now oil. Okay, so the oil market obviously has put in a potential pivot low here on the 60-minute chart around the 56.70 level. So again, that's supporting the view that the FTSE may well rise here, but again, we need to be open to the S&P or US markets H&S formations, which are very bearish. Okay, folks, so that certainly seems to be a wrap with regards to the bond market. The Euro USD, I'll just quickly cover as well, because obviously the markets are trading inverse to it, so it's very important. As to the moves, the Euro USD obviously has sold off quite substantially now. Sell-off certainly looks exhausted, and that's why we're seeing this short squeeze ensue. Okay, and whether how long this short squeeze lasts is a different obviously debate altogether. But for now, it certainly seems that we've certainly overdone, and that 200 MA should hold as support into the future. Okay, so you have your commodities, you have your oil, you have your indices. Okay, so that's basically all you need for now. Any questions at all, feel free to contact me or email me. And if you want to join the live analysis service, you can certainly do so, which gives live trades in real time on a daily basis. Or alternatively, you can join the swing trading, which is for free, and that obviously gives you trades on a swing trading basis. Okay, folks, risk on, risk off, wax on, wax off, and be sure to